Welcome back to the channel. It has been quite a while, friends. It's been quite a while. It's been about 40 days since we've made the last video. Maybe a little bit more than that. I don't know. I haven't checked. But here's the deal. We're back now. Life's been busy. I haven't had time to do this, but now I do. So today we have a bunch planned to kind of make up for lost time. All right, here's what we're going to do. We're going to go over a few articles that will summarize a lot about what's going on in the last month as far as impacts to the industry. After that, we're going to look at some on-chain metrics for Bitcoin. Then we're going to check out the Bitcoin chart, the Ethereum chart, and the EGLD chart. So we got a lot to do. I'm not going to bore you with a bunch of information in the beginning. We're just going to dive right into it. So I want to just tell you a couple of things though before we do start. Make sure you check the description. Follow me on Twitter. I started a thread just the other day where I'm asking for people to give me their profit-taking strategies. I already have a lot that I want to include in a video, but I want to see if there's anything I'm missing that needs to be in a video about profit-taking. We're going to do that soon. So make sure you check out the Twitter, follow me on there. Super followers on there, that's a $4.99 a month subscription thing if you want to do it. It's up to you. If you decide to do that, you're going to get early access to my videos and additional threads and content on Twitter. So check it out, decide if you want to do something like that. Let's get started. All right, here we go. First off, we're going to start off with a little bit of news. All right, it's going to be quick. It's not going to be too much. There's only, I think, 3 articles that I want to show you. So let's go ahead and get moving. All right. And congrats on surviving this long in the bear market. It's been rough, but y'all have been doing good. All right, let's do this. Here we go. It says, according to the Justice Department, Ishan Wahi, I don't know if I'm saying it right, but he's a former product manager for Coinbase. He was detained on Thursday morning because of an insider trading scheme while he was working at Coinbase. He had gains of over 1.5 million. He was privy and integral to assets that were listed on the platform. So this dude knew what was going to be listed on the platform, and he may have even been a part of making some of those decisions. Okay? He was a product manager. So these are all products. It's very possible that he had influence on what was going to be listed on the exchange. And he was then, trading. And you know what gets me? It's like, if this dude is doing this and he's arrested, what about Nancy Pelosi? I mean, come on, right? She's made more money on the Nvidia trade in the last month than she makes in 3 years, right? And she had a big part to play in Nvidia doing that well. Just saying. Okay. Insider trading using confidential information about crypto assets were scheduled to be listed on the exchanges. It's the first instance of an arrest for insider trading within the cryptocurrency industry. Very interesting thing. They are now starting to go. This is going to set a precedent. So if people are doing insider trading with new listings on exchanges and things like that are based out of the United States, they can now get arrested for insider trading. That's what something like this does. It sets a legal precedent. Okay. Our message with these charges is clear. Fraud is fraud, whether it occurs on the blockchain or on Wall Street. Hope they mention within the government and Congress. That'd be nice too, within the House of Representatives, maybe, maybe the speaker, maybe Nancy Pelosi has something to do with some shady business. We don't know. This was the U.S. attorney who said that. I think this is good news. You definitely want less insider trading and things like that happening within crypto because it is a big problem right now. And as long as that continues, trust within the ecosystem is going to be very difficult. So this is very interesting. Let's move on. Next, Three Arrows Capital. Okay, so one thing I want you to know about Three Arrows Capital is basically a hedge fund, and it's pretty much imploded. It was a crypto hedge fund. When the markets went down, just like Celsius, it's basically gone. I mean, Celsius isn't really gone, but Three Arrows Capital is pretty much dead. So let's see what this says here. It says the founders of Three Arrows Capital have finally broken their silence after 5 weeks since the dramatic downturn and the implosion of their hedge fund. I'm actually going to skip a lot of this. It says it is estimated that Three Arrows Capital still owes about $3.5 billion to 27 different companies, including $2.3 billion to digital currency lender Genesis Global Trading. The main reason that these companies like hedge funds like this lose so much money is because they are taking assets that they are borrowing, they are investing them, and they're trading them. Now, when they're doing things like this, it's very possible that during a market downturn, you can lose a ton of money. Risk management was not good, and these people were doing it with billions. The reason I say this is because you need to be well aware of your risks, okay? A lot of people think that they put money in a hedge fund or an ETF and all that stuff, and suddenly it's somehow safer than anything else. It's not. Even if you were invested in Snapchat, you would have lost about 40% in the last couple of days, right? They missed earnings and the stock just tanked. So anyone who comes here and says to me like, hey, crypto is too risky. No, it's not. So is everything else. At least you're betting on the future in something that has a big part to play in the future, something that is as important as money and currency, that is outdated and legacy and that you cannot trust. There is now a way to trust it, and that way is Bitcoin. Right? DeFi is not quite there yet. There's still a lot of risk with DeFi. You're reliant on a team of people. If that team of people doesn't execute, or if something happens to them, well, your DeFi token's pretty much dead. Right? That can happen with any of them. A DeFi token can go to zero like that. Right? But that's very unlikely to happen with Bitcoin. So I want people to know that, you really have to hedge your risks in some ways. Now, when I say DeFi, I'm talking about Ethereum, EGLD, Cardano, Polkadot, like anything. All of these tokens have massive risk because they're like companies. They're like securities. You're reliant on a company to execute. So just be careful. Even though I don't really believe too much that Ethereum is going to end up being the leader down the road, I still have money invested in it, but not an excessive amount, right? I manage my risk. EGLD, I think, is the best L1 out there right now, the best layer 1 DeFi technology. I have money invested in it, but if it was to go to zero, it's not going to kill me, right? I invest managing risk, right? Even if Bitcoin went to zero, like that would hurt, but it is not going to kill me. You know what I mean? Risk. Manage your risk and be okay with these market downturns, right? I was telling you this when the market was at its peak. So now's the time that you really got to learn. If you're still here, you got to learn, because a lot of people aren't still here. So I don't mean like physically, I mean in this space. You know what I mean? A lot of people have been liquidated and they're gone from crypto. So keep it in mind and don't turn out to do things as dumb as these idiots at Three Arrows Capital. Okay, let's move on. A damaged brand. All right, this is a very interesting article, so pay attention to this one. It says former Celsius employee on the crypto lender's mismanagement and alleged token manipulation. Now, what's really interesting about this is that this guy who's doing an interview here, his name's Timothy Cradle. He is Celsius's former compliance and financial crimes director. I mean, what really gets me about this is that this guy is speaking out against Celsius. Like, where were you for the last couple of years, dude? He's the compliance and financial crimes director, man. Like, this guy should have really been speaking up in his job if things were not being done properly with people's funds. Now, I'm not saying he's responsible, but I'm just saying it's kind of ironic that the guy speaking out against them is the compliance and financial crimes director. Okay, anyways, let's move on. Cradle said he was motivated to speak out about the internal practices within Celsius because the company allegedly betrayed one of its core promises, transparency. Well, yeah, I mean, and he could have spoken outright, but chances are he would have been fired. But anyways, let's move on. Okay, among oddities, said Cradle, was an onboarding session with a customer at which the Celsius chief financial officer said the company did not engage in trading. He says that just didn't make any sense, noting that Celsius had a trading desk and a head of trading. Trading wasn't even in Celsius's risk disclosures that were made to customers. He says here, I didn't think there was anything intentional or malicious about withholding that information. I just thought Celsius didn't want people to know that how they were generating yield. I mean, that statement makes no sense, dude. It's like, yo, this guy is saying he doesn't think there's anything intentional or malicious about not telling people that they're trading with their funds, right? You just thought that they didn't want people to know how they're generating yield. Well, obviously that's intentional and malicious because you don't want people to know that you're taking their deposits and trading with them and risking those deposits. It makes sense. It says the company's risk disclosure should have provided insight into how it was deploying assets. Completely agree there. He also says during a Christmas party back in 2019, the CFO and head of trading at the time mentioned that they were active in the market attempting to increase the price of the SEL token. Now, active in the market can mean a lot of things. It can mean that they're manipulating with leverage trading. It can also mean that they're just trying to increase mentions and engagement on platforms like Twitter and do more interviews and things like that. That's also being active in the market. So take that one with a grain of salt. I'm not really sure what that could lead to. He says, in another conversation between an executive and a compliance team member, remember, this is the guy, he's the platform's former compliance and financial crimes director. So this was, a conversation that an executive and one of his team members had. He said that he heard Celsius was looking to hold prices of the CEL token down in order to trim the bonus pool. Now, I don't know what the bonus pool is. I'm not super familiar with the Celsius platform, but all I know is that that's not a good thing. You know what I'm saying? That means they're manipulating the price. He also says here, it seems pretty apparent that Celsius was actively manipulating the price of the CEL token. I mean, based on everything he's told us so far in this interview, it's pretty obvious. Celsius executive management was manipulating the price of CEL. It also says here, I think someone would have to be frankly insane to trust Celsius with their assets at this point. I kind of agree with this. I mean, at this point, look, I still hold some CEL because, at this point, I'm just like, whatever, what's the point of selling it? I'll get a few $100 out of it. And pretty much I've already lost whatever I put in there. And it wasn't a ton, it was a good amount, but it wasn't a ton, nothing that I'm going to really miss much, but I might as well leave it there and just see what happens. Or at some point, if I find like, hey, what's the point of keeping even a few $100s in Celsius when I could put it into this up and coming token and make back all my money? Maybe I'll do that, right? Even if you're down 90%, that doesn't mean you can't go up 1,000% if you put that in the right thing. So there's still opportunities to recover money. Granted, it's risky. So always manage your risk no matter what it is. All right, that is everything for the articles. Now, why did I go over these articles? Well, one, because someone being arrested for insider trading is a pretty big thing in the crypto world. What that is telling us is that pretty much the entire space is moving into a direction now where people are going to really embrace that regulation. You want to see people who are insider trading be arrested and taken care of. Like they shouldn't be doing that. It's unfair to the rest of us. You want the end goal is going to be something that is inclusive of all people and that also is fair. We need a fair market in this world. We don't really have one. And the fairer you are, the better. Catching people for insider trading and stuff is really good. You need that outside regulation to help things out. So I think that's really important. Three Arrows Capital and Celsius. The reason I talked about these is because this market downturn has not just liquidated a few people, it has liquidated entire billion-dollar businesses. Three Arrows Capital owes 27 companies a total of $3.5 billion. All right, they owe one company alone $2.5 billion or $2.3 billion. It's insane what this bear market has done, but it also shows you why you do not want to be overly leveraged. It doesn't matter if you're investing with $100, $1,000, $10,000, or $10 billion. Even those people doing it with billions are making the same mistakes. So just manage your risk. Somehow, these idiots who manage billions of dollars haven't learned this. I don't understand. I don't know how they get into this business. I mean, they should have me managing a hedge fund, and I'd probably do a lot better. But then again, I don't necessarily want to do that. If you're looking to hire me for something like that, send me an email or send me a message. We'll talk. I'll need a pretty big salary though. All right, let's keep moving. All right, now we're going to go on to crypto quant. There we go. All right. The first thing that we're looking at is what I call the reserve flows. All right, so we're looking at this chart and it's showing us a number of different things. In orange, you're looking at the miner reserve. In blue, you're looking at the price of Bitcoin. And in red, you're looking at the exchange reserve. Very simple things to understand. The miner reserve is the amount of Bitcoin held by miners. The price is the price. And then the exchange reserve is the amount of Bitcoin held on exchanges. So what have we seen recently? You see, this goes all the way back to 2018 on the bottom here. You can see that. So we are actually going to move just to these last few months in 2022. And what you can see here, hang on, let's zoom out on these. What you can see here is pretty interesting, right? You see that the miner reserve recently dropped quite significantly. You had a pretty significant drop in miner reserve. If you zoom out, you'll see that the miner reserve has not had this big of a drop since the time Bitcoin started doing its first massive move up. This means that at this point in time, Bitcoin had taken such a huge move up, the miners capitulated, and during that capitulation, you actually saw a lot of that Bitcoin being bought up. Miners were taking profits. Well, what's happened now? Bitcoin has gone down, and you see miners have capitulated to some degree just over the last 30 days. Now, that is telling me that miners are covering their losses to some degree. They are taking money to pay for operations. They're likely shutting down different things. And when I say different things, certain old unprofitable miners. And we're going to look at the hash rate and Poile multiple to confirm that, because if I'm right about that, we should see it on those charts. So we'll take a look. Maybe I'm wrong. I'm not sure yet. But that's what's really happened. Miners have capitulated a bit. They have taken some profits. During that time, ironically, Bitcoin has started doing well. It seems like the market, price-wise, has absorbed a lot of what the miners have been getting rid of. Now, have the miners been doing this OTC? I'm not 100% sure. Maybe it didn't impact price that directly. But seeing the miners take profits at this, not really take profits, but liquidate some at this point is understandable. You have to cover your losses when you're running businesses. Okay, then up here, you see the exchange reserve. Now, this is really interesting because no matter what, even through this entire downturn, the exchange reserve overall is still trending down. It means the amount of Bitcoin on exchange is still trending down. Now, if you think that Bitcoin is never going to have demand again, then this really doesn't matter to you to see the exchange reserve drop. But I think that like every other time in history, after a bear market, and then in halving, Bitcoin is going to go increase significantly in demand. And when I see that occurring within the next year and a half, and the exchange reserve continues to drop, well, that just tells me that that supply shock that we're always talking about, it's still there, and it's going to be massive, and it's going to come. Okay, now let's confirm what I talked about with the miner reserve. Okay. Okay, that makes sense. So you're seeing the hash rate has dropped. So this means that miners are very likely shutting down unprofitable systems. That means we should also see the Poile multiple is going to be low and show that they're unprofitable. Okay, so the Poile multiple is basically the miner profitability rate, and you can see that that's extremely low as well. All right, so these things tell us a few things, right? We look at the hash rate and we see that the hash rate has been dropping. Right? That means that miners have been shutting off gear. Why would they shut off certain gear? Well, because older gear is not going to be profitable at these prices. Bitcoin needs to be worth a lot more for older gear to be worth turning on. If that gear cannot generate enough of a hash rate for the power that it's consuming, it's unprofitable. You got to turn that off when the price is low. So we look at the Poile multiple and confirm, well, right now, miners are pretty much as unprofitable as they could be. The last time they were this unprofitable was when we had that bear phase after the first top at 60K, right? Before that, they were not this unprofitable since the 2020 time during the pandemic. All right, let's move on. That's everything on chain that I think is relevant. We don't really need to look at a lot. This is the Bitcoin chart, friends. And what I want you to really notice here are a couple of levels that I was looking at, okay? So what I was looking at before was 24.3K as a top. It happened to be almost exact that we called that top. Well, then we were looking at 22.5K for support. We wanted support at 22.5 if we were going to have a quick breakout. Well, we did get a little support there. We came back up, but we have fallen through 22.5. So we got to get rid of 22.5. Now, what are we looking at as far as support? Well, we're definitely setting in a new support level here at around 22.2K. So I'd say 22K is about a decent support level, and it was a prior top, back in July. So the fact that that was a short-term top and now is turning into a support makes sense. Okay, this is on the hourly, so I'm going to switch over to the 4 hour so we can take like a little bit of a closer look at what's happening long-term. So what you're really seeing here is we have this massive regression line that we've been following. It's kind of been like our median uptrend line, right? We've kind of gone a little bit below it, a little above it, a little bit below it. We've been trading right along this regression channel. Well, we have a support zone underneath this regression channel between 20.3K and 21.3K. So pretty much between 20 and 21K. Now, what's interesting about this support zone on the 4-hour is that you'll see all of the moving averages are starting to get constricted here. We're actually getting support on the middle of this channel on the moving averages that if you look at the thing, you'll know exactly which ones they are. So the blue moving average, for example, that one is the 20 exponential moving average. The orange is the 50 exponential moving average. And then the cyan one here at the bottom, that's the 100 exponential, and the red one is the 200 exponential. Right now, what's happening is that we're getting like stuck between the 50 and the 200 exponential moving averages. So these moving averages are actually telling us where we are seeing a really good support level. Now, is it crazy for us to lose this? Not really, because we do have the 100 exponential right below it at around 21.7. I would be looking at that to set our bottom. And the reason I say that is because if this is a true uptrend, well, what has really happened as these moving average has shifted is that we have been getting support on that 100 exponential moving average, right? We hit it here, and now we've been moving up. If we're getting support on the 20, that is the most bullish sign. We've lost the 20 right now. But what we want to see if we go low, if we can get support on this 100 exponential moving average and then start coming back up and get past this regression line, we want to bounce off the 20. And if that was to happen, well, then more than likely, we're going to start shooting up towards the 25, 26K mark. I expect we'll get a lot of resistance at 25K. It's a psychological level. I'm sure people are going to want to sell at that point. Keep in mind, all right, this is if we're going to be immediately bullish. If I see us getting a bounce at around 21.7 or even holding 22, then I'm going to expect that we may be on our way back up. The way that I'm going to know is as soon as we pass that 20 exponential moving average on the 4-hour, the blue moving average, if we go past that and get a bounce there, well, then I'm going to expect something like this to happen where we bounced on it here, and then we might have a bounce like this that just really takes us and shoots us up. So that's kind of what I'm looking at. I'm using these moving averages to really know how we're going to have short-term price action, and I'm using that to make my DCA buys. I also have buys sitting in the 20 and 21K zone. And the reason is because that has been a massive support zone in this entire few months of trading. Now, if that's the case, are we going, so if you really zoom out and you take a look, you'll see what I mean, right? You'll see that this area here has been where the majority of trading has taken place over the last few months. That to me means if the price comes back down, and you can even see like the VPVR here, has such massive volume. This is our main support zone. There is a good chance that if we are actually flipping bullish that we may not lose this zone again. And if we don't, that could mean that around 20K would be like the best place to buy. You may not get a lower opportunity than that. Unless we go into this zone and we lose it and we take a drop down to like 14, 15K, which I still think is possible because the global economic climate is so crazy. You know, if things happen globally that are just insane, maybe that could happen. But it seems unlikely to me. I think what's going to end up happening here is that we're going to slowly start flipping bullish. Also because I think the government needs it, right? You have an election coming up next year. So they're going to want to start getting wins. And right now, the United States is hurting in terms of everyone dealing with inflation that they haven't dealt with. I mean, other areas of the world are so much worse. So it's kind of like a little weird that people think things are so bad here. They're really not that bad compared to the rest of the world. But a lot of people have lost a lot of money, and inflation is making it difficult for a lot of people to even buy food and do things like that. And, you know, people are having to change their lifestyles because their costs of everything are just rising. So the government, if they want to stay in power, right? If the Democratic Party wants to stay in power in the next election, they're going to need some wins. One of the biggest wins they can get right now is to stimulate the economy. So I think they're going to slowly stop doing all of the interest rate hikes. I think the Fed is going to slowly stop that. I think that we're going to see markets start getting propped up again because, let's face it, they prop up markets artificially. And then I think that during the campaign season, you'll see a lot of people talking about how they are fixing the economy and how they're doing this. And if they win the next election, that the economy will be great and blah, blah, blah. It seems like an easy way to get an economic win. So you take that into consideration. You take into consideration that we're about a year and a half away from the next halving. And you start to realize that this could very well be the bottom that we had been looking for. Unconfirmed yet. We're still in a very, very risky market. So my lowest order at this point is around 18K. I always go lower than I think is the lowest. So I think 20K is going to be the lowest, but that means I need to have some orders at 18 just in case I'm wrong. But I did have them all the way down to 13 not long ago. I've killed all those orders. There's no reason to have them there. At least I don't think so. But I've done some more dollar cost averaging and I've accumulated more Bitcoin at these amazing prices. The lowest that I got it for was around 18.7, which, hey, you can't really argue with that. Like being able to buy down here, I mean, come on, that's awesome. Okay, so that's what I'm seeing with Bitcoin. I am looking for some confirmations right now on how we interact with these 4-hour moving averages. Okay, this is mainly what I'm using for my dollar cost average decisions. Now, if we look at Bitcoin on the daily, well, what you can see on the daily is very clear. We have the 20 exponential moving average sitting at 21.7. And what we really want to see to remain bullish is we want to see a bounce off that 20. That's what we want to see. We have been getting resistance on the 20 exponential moving average the entire way down. That blue moving average has been resistance. We have not been able to get above it. Every time we've hit that moving average, we have dropped. Well, we've been below that moving average for some time, and now we have finally come above it. And on the daily chart, that is a big deal because now we are getting close to testing it. We are like a day or two away from seeing, are we going to come back down to that 20.6, 20.7 mark and test that 20 exponential moving average on the daily. It just so happens to coincide with the 45 level on the RSI. This tells me that if we come and touch this moving average and we don't lose it and we bounce, this could be the first inclination that we are not only going to be soon to break 25K, but we may be heading back up to the 30s and 40s. But we could still be at least a month or two out from that happening. All I know is that right now, it seems logical that we bounce from here and start putting in a lot more trading volume between 24 and 30,000. This area here. You look on the right on the VPVR, and what you really see here, I mean, it is quite easy to figure out what I'm getting at here, right? You have a ton of volume here. So you see like all this volume here. What in the world? Why is that so strange? It's like the hotkeys aren't working, dude. Oh my God. I think my keyboard died. Okay, I'm gonna have to put some batteries in there. Okay, so I'm gonna have to use my mouse for everything. So we're gonna remove this. So what you see here is this, right? Very clearly, you see the amount of volume that's been put in here. This is from 17K to 24.3. You can also see that we have a lot of volume between 27K and 32K. Right? So you see those volume mountains pretty much. And what we're missing is a good amount of volume between 29. So from like right here all the way down to here. So this area is where I want to see volume, which means that if we bounce off of here and we go like this and get resistance on the 30 mark and then come back down and get support on the 20 mark, well, we could be putting in a lot more trading in those mid 20s over the next month or so. Right, as we start figuring out what's going to happen in the market. So keep that in mind. That would make a lot of sense, and it would allow us to trade above the 20 exponential moving average on the daily chart, which is really what we want to see. Okay, that's everything for Bitcoin. That's quite a lot of Bitcoin TA. Let's go ahead and move on, all right? We're going to look at Ethereum now. So with Ethereum, one of the things that we really see, and I'm not going to even show you the hourly for Ethereum, what we want to look at for Ethereum is this. Now, for Ethereum, we've had a massive run up of late, right? We were close around July. We were at around $1,000 for Ethereum. It was a terrific time to buy some Ethereum. And it looks like as Bitcoin's been recovering, Ethereum has actually been going a little asymmetric. It's been moving a lot faster. Now, what does that mean? Well, that means that Ethereum had a massive run up very quickly. It has actually been riding its 20 exponential moving average on the 4-hour and just now is starting to fall a little bit below it. Well, with Ethereum, this tells me one thing, right? If Bitcoin doesn't break out immediately and the market starts consolidating for another couple of weeks, Ethereum's looking to go back down to around 1,300, right? That could mean something like this, right? Ethereum comes back down, it tests these moving averages, puts in more trading volume between 1,300 and about 1,500. This area here needs more volume. So keep that in mind. I'm not entirely convinced that Ethereum is just going to go asymmetric on its own outside of Bitcoin. I think it is going to follow the rest of the market. And I think people got very enthusiastic about buying Ethereum down here because this is the lowest it had gone in some time. Now, the other thing is, remember, if you have 32 ETH, you're going to qualify for staking in the future. So that's if you want to, host your own node or whatever it is. I don't remember exactly, but 32 ETH is like the big amount for people to accumulate. So I'm sure that with the prices dropping back down here, you've had a lot of people that have been accumulating their 32 ETH. So keep that in mind as well. This looks like a good area for a slight consolidation, especially since Ethereum kind of overshot a lot of other assets with its appreciation. I think it's possible that we see it coming back down to the 1,300 level. That's the main thing I wanted to show you. You can kind of see on the RSI, it's losing. Actually, that's not the 45 level. Let's see if we can we do this? Oh, goodness, dude. I can't type. Okay, but basically the 45 level is like right over here, okay? So it is about to come down to touch that 45 level. So you see where my dashed line is on the RSI? That is about the 45 level. Now, in order for it to continue moving up, it's gonna have to bounce on the RSI very soon. Right now, it doesn't seem like that's gonna happen, just with the way the rest of the market is reacting to prices at the moment, but we don't know. I would just say that it's a good idea that if you want to buy Ethereum, that you want to set some orders down at around 13 to 1400. Maybe not as low as 13, but 1350 to 1400. I think you have a decent shot of those orders hitting. So I'm not really accumulating any Ethereum at this point. I already have the Ethereum that I want. But if you are looking to accumulate, that may be a good place to put some orders in, unless you think things are just going to shoot up immediately. If that's the case, then you might want to just DCA right now. That's what I'm looking for Ethereum. Long term, I do think Ethereum has a lot of room to grow. I do think that at some point Ethereum will probably top out, but I don't think it's going to top out until it hits like 8,000, 9,000. Once it reaches that amount, I think a lot of people are going to take profits. And I actually think a lot of people are going to take profits when Ethereum is even starting to hit 4,000, 4,500. When it hits those prices, I think it's going to be a great time to start taking some profits from Ethereum, because I think it's going to come back down. I think it's really going to get volatile and it's going to drop because you're going to have a ton of people taking profits. So get your profit-taking strategies in mind. Start thinking about that and make sure you're subscribed to me if you're not already, because we're going to have a profit-taking video coming very soon. Okay, let's move on to EGLD. That's really all I had to show you for Ethereum. I mean, I think that, is that it? Yeah, I mean, if you look at this on the daily, you can see that the 20 exponential moving average is sitting at 1360, right? What did I tell you? I said that when you're switching to a bullish phase, you want to come back down and bounce off that 20 exponential moving average. It's sitting at 1350 right now, or 1360. So having orders between like 1350 and 1450, it's a smart move. You know, it's very likely that it'll come back down, test that area, and then move away from there. You may even see it come as low as 1,200. It's a possibility because those were two short-term tops, right? Around 1,200. So it could very well drop below the 20 exponential, touch that 1,200 area, and then keep moving. So actually, if I was trying to dollar cost average Ethereum, I would probably have a few small orders as low as 1,200, and then have the higher orders at like 1350, 1450, and try to get some Ethereum at those levels. I think that you probably have a lot of good luck with that happening. Okay, let's move on to EGLD and wrap up this video. We've been going quite some time now, so I think we're good to start wrapping things up with our final technical analysis, all right? So with EGLD, we have a number of resistance levels that we have to beat. Our ultra pain support was around $35, $40, and we did bounce off of that, but we are getting a ton of resistance at this $54 to $62 level. Remember what I told you on Twitter not too long ago, right? When we bounced above 62, I said we need to get past 65 for us to have any chance of going further. Well, we lost that level and we've come back down, and we're getting support at around the 50 mark, the $50, $53 mark. That's like right at the bottom of this support channel. We're at 44 to 62 is this resistance zone. So we are testing the bottom of this resistance zone. We're at $53.95. It is literally right at the bottom of that resistance zone. Well, we got to see how that's going to play out, because if we lose it, well, then we're looking to get support at around $47, and we have the unfortunate possibility of dropping again, if we lose this entire pattern of dropping again back down to the $40 level. Is it possible? It is possible, but I think it only happens if Bitcoin takes a downturn and goes back down to like 20K or 18K. Then you might see it. Even then you may not, because one thing that I'm noticing here is that we have seen that we're still trending down in volume. So you're not having as much sell volume as you're having buy volume. If you really look at these daily candles here for EGLD, you're seeing that EGLD is basically doing a lot more buying than selling now. So a lot of people are accumulating. This is an accumulation stage for EGLD. Now, if you're having that accumulation stage, it's unlikely that these people that are accumulating now are going to capitulate, right, at these levels. These are new people coming in, or even current holders that are lowering their cost basis and stuff like that, and are likely going to hold long term. So keep that in mind. The biggest thing for EGLD that has to happen is that there needs to be adoption and people using the platform. That needs to increase. Now, it's going to be very hard to increase that at a time when all of Bitcoin and DeFi is in a bear market, right? You tend to have a lot less people coming in for investment. And for the most part, that's like because of what's happening economically globally. It impacts everything. So getting users to get onto a DeFi platform when people are not really at a state to invest is very difficult. It could be some time until that happens. But I do think that as markets start picking up, once things start going up, you're going to see a lot of people getting into EGLD because it still has the same things that it had before. It has a finite supply. It also has great usable features on the blockchain. You have a ton of NFT places, NFT markets. You have a lot of projects that just put out tremendous quality. You have a DEX that works extremely well. You have transaction fees that are incredibly low. You have an app that is like best in class, like one of the best wallets I have on my phone. One of the ones I love using the most. I go on there and check out my NFTs. I look at like what's going on as far as checking prices and all that stuff. I use it sometimes just to check other prices too. It's a very useful app. So I could very much see that as people start getting more into DeFi, it starts becoming more mainstream. EGLD has a lot of potential, but we got to see that there's some effort made towards grabbing those users. So I want to see that come from the team, and I don't really know what the marketing strategies are going to be, but I think that's going to be very important for this next phase, because I think the bull run is going to kick off again, and when it does, we're going to have to take real big advantage of making sure that users know that this is why you want to use the Elrond blockchain. So I think that's going to be very important. Price-wise, keep an eye out for how we do at this 54 level. It is like a super key level, and we are on that level right now. So what we really want to see is that we go back up above 57 and we hold that and then bounce. On the daily, that's where our 20 exponential moving average is. We were above the moving average, but we have still not bounced on it. We're actually getting resistance on it now. So what we really want to see is that we bounce from 54 and we go up above 57 and we get support on 57. If we get support on 57, markets start recovering, then it's very possible that the next bounce up is going to be closer to the 70, 72 level, and you'll see us start putting in volume here. Okay, so that's on the daily chart. That's the more long-term view. And when I say long-term, I'm talking about like the next 30 days. That's what I'm looking at. If we get that support here, if we lose that support here at 54, well, then I'm looking closer to like the 48, 49 level to make sure we get support day. We lose 48 and we may be headed back down to around 40. So keep that in mind. That's what I'm looking at now. My lowest orders for EGLD right now do actually sit at around $40. I don't think I need to change that. I have a few orders all the way from 40 to 45 just to pick up a few extra EGLD if the price drops. Okay, let's go ahead and look at the 4-hour chart to see if we can see anything more interesting short term. Well, right now, very interesting, because if you take a look at this trend line moving up, well, what do you see here, right? What you really see on this trend line is that we are at a key area at this very moment, right? This is the area here, and we literally just touched it. It's at around 52. So we want to hold that trend, because you look at this trend a little bit bigger, and what do you see, right? You see a very clear and very easy to visualize triangle. Now, this triangle is called a continuation pattern. I've talked about continuation patterns before. Usually, when price is moving down and you have a continuation pattern, you continue to the downside. But that's in a bear market. If this was the bear market bottom and we are, as a market, starting to recover, well, then what that tells me is that we could come back up to around $60 and then come back down to around $55 and then have a breakout around early August, August the 3rd, August the 4th, and that's when we shoot up and go into that $75 range. Actually, probably a lot higher than that. Hold on, I'm gonna have to move this thing back. I didn't realize this wasn't locked. So this is supposed to be from 54. There you go, we'll just leave it there for right now. Okay, so if that was to happen, right, let's say we were to break out from this pattern. What does that mean? Well, what that means to me is bare minimum. That's going to be our breakout from the first peak down to the bottom. In reality, our massive breakout is going to be that length. But our bare minimum breakout from this at around 70% of the, or about 90% of the apex there, right, takes us back into this upper resistance zone, which makes sense, right? We break out of one zone, we hit resistance at our next zone between 77 and 87. So if markets do continue recovering and we start going in that direction, well, and it may not be a direct move up, it could be something like this where the price starts moving up and then we hit resistance at $77 or between 77 and 87. But that's what we're looking at. If we break out of this pattern, the breakout should happen sometime in early August, and we're looking to hit resistance at around $77, $80. That's a pretty massive move up from where we are now. It would be great. That's what we're looking at. Moving averages are getting constricted on the 4-hour. Very, very possible that we're having that spring-loaded coil effect where all the pressure is building up, and that pressure is going to release and explode and take the price back up if the rest of the market moves that way. So keep watching Bitcoin, see what's going on a global stage, and see if you think that this is feasible. Because if you don't think it's feasible, well, something's going to happen when we reach here. And if it's not going to be a breakout up, then more than likely what it'll be is a move to the downside to around 45, and then we can keep this pattern going, right? That would extend the entire pattern. So it's very unlikely that we're going to break out and then come down and extend the pattern, right? If we extend the pattern early August, we're going to have a drop to around 45. If we are not extending the pattern and we have a legitimate breakout, then early August, we will most likely start our way up into the 60s. And then our goal is to hit around $80 for resistance. That is everything, you guys. That's what I'm looking at on the charts. That is kind of where my head's at as far as what's happening with prices. I'm using all this information to accumulate. That's what I'm doing. Dollar cost average, accumulate, get myself ready for the next bull phase. All right, everybody. Today, we've had a long video. This has been one of the longer ones, but I think we have done a good recap of everything that's really been major. What's happened with Celsius, 3 Arrows Capital, Coinbase, and finally having an arrest for insider trading in crypto. What's happening with the charts, what's happening on chain. I think you got it all. Make sure you make sure you subscribe, follow me on Twitter, decide if you want to be a super follower. It's a good way to help me out if you want to support content and allow me to start making more stuff on here. You can always check out on my Twitter. I have my link to my NFT site. It's in the description too. That's another way to donate. You can buy one of those NFTs. That way you get some of my digital art skills, and in return, I get a donation. So I'm not just taking donations for free. And that's pretty much it. I hope you guys have a wonderful rest of your weekend. Leave me a comment. Let me know how you like the video after a month. And we'll try to do another video real soon, all right? Take it easy, you guys. Stay peaceful. Stay good. I'll see you again soon. All right. Peace.